though we've had a lot of turmoil in the market lately, I'm heartened by the fact that the aggregates plays, companies that make crushed stone, sand, gravel, concrete, asphalt, and cement for all sorts of infrastructure and construction projects, are only a point or two of their all-time highs. Take Martin Marietta, MLM, the #2 aggregates play in America, with lots of exposure to the relatively booming Southeast and the on-fire Texas market. Martin Marietta is less than a point off its all-time highs, giving us a 21% return since we last spoke to the CEO in February, in part because if you back out some of the weather issues, it delivered a pretty darn good quarter last week, thanks to some strong infrastructure, housing, and non-residential construction that we have to talk about. So let's take a closer look with Ward Nye, the chairman and CEO of Martin Marietta Materials, hear more about how his company's doing and where it's headed. Mr. Nye, welcome back to Mad Money.
Thank you.
Good to see you. Have a seat.
Thanks.
You know, your conference call and your documents are all filled, frankly, with, I don't want to say euphoria, but really tremendous enthusiasm about what's happening. Got pricing going, you got volume going. I'm wondering whether it isn't just because you're in some really great regions, though.
But you know what? That's a lot of it. Where you are matters a great deal in our business. And when we were together last, I spoke about the fact that we now have a 1 or 2 position in 85% of our markets versus 65 last time. You said it in the opening comments. Large exposure to the Southwest and to the Southeast. And what we're seeing right now is a Southeastern comeback. And when we see a little bit of that in our business, it makes a big difference.
Well, I think you should talk about that because one of the things that an undercurrent, I think, in the theme is that some of the states are flush. And the states mean a lot. And some of the builders are flush. Talk about Florida and Texas, because they're both pretty great stories.
Well, they are both great stories. If you look at Texas, they've got a $7.5 billion letting program in Texas this year, just in TxDOT. Georgia has come back, put another $900 million to what they're putting to infrastructure, almost doubling what they were doing. Iowa came back, put in a 10 cents a gallon gas tax increase. That raises that bidding up by 30% in a state like Iowa. Again, we're back to the notion of where you are matters very much. So we're seeing states, and I think this is a key piece of it, they're really looking at something from the federal government that over the last decade has not been consistent.
That's my point. That's my point. And you even talk about how there's certain, I mean, I don't know whether you're Republican or Democrat, but it's clear that when you have a Republican governor and Republican legislature, those are they're really awarding a lot of money to construction.
They are. It's interesting. Our home state of North Carolina right now is having a very good faith debate between the governor and the legislature, not on whether they're going to spend more in infrastructure, how much more they're going to spend in infrastructure right now. It's a good place.
But you are also optimistic. You think that the federal government is going to come around and do infrastructure.
You know, for the first time in over a decade, we've got one half of the Congress that's actually come forward with a 6-year bill. Right. So the Senate's come forward with that. They're now in recess. The thought is the House is going to come back. They're going to put their bill forward. We're going to see a conference committee. And I think there are a lot of people who are usually awfully skeptical about this, and usually I am as well.
I know. This is a change.
It is a little bit of a change. Who would come back and say, I think by year end, we might actually see a highway bill.
Well, that would be something, because we've been waiting. Now, I don't want to slight non-residential or residential. Particularly, I thought it was interesting that even though Texas, we all know oil and gas, the prices have come down, the building for petrochemical refinery, very strong.
It is strong, and we're starting to see some of those go right now in South Texas. I mean, here's a way to look at it. Trailing 12 months, non-res construction, heavy side really, in the U.S., up $33 billion, $18 billion of that in Texas all by itself. Right. So non-res continues to be very strong in that marketplace.
And you're a voracious buyer of your own stock, just a believer.
We believe in ourselves. There's no question about that, and we've certainly put out the notion that we're going to come back and buy 20 million shares of our stock back.
You don't have that many shares. Well, I mean, that would be a huge buy. It would get you back to where you were before the fantastic acquisition.
Well, that's entirely correct. But the fact is, we feel like we can do a couple of things. We think we can buy shares back in Martin Marietta, but we're also going to continue to participate in this industry because we think we can find good buys over the next several years as well. Actually, our best first dollar is doing the right acquisition. Sometimes the right acquisition is doing more of Martin Marietta. Sometimes it's buying another company.
Just one last question. I want people to know what happens in this lower oil and gas price. Diesel savings for you.
Yeah.
20, I mean, how much? It's just a monumental figure.
Well, think of it in these terms. On an annual basis, we'll use about 45 million gallons of diesel fuel. It's down pretty considerably, as you said, year over year. Our quick math says probably we'll save about $29 million this year just in diesel.
And that's how great companies work. These are the kinds of companies that I love. They've got so much wind at their back. That's Ward Nye, the president and CEO of Martin Marietta Materials. MLM, it's done great for us. I think it's going to continue to do so. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.